Hey everyone, welcome back. Hope you guys are doing a great Friday. It's the end of the week. We finally have the weekend ahead of us, and we do have some things to talk about in today's video. So thank you so much for coming in to watch this. But we do have to talk about some good stories. We have Reddit reported they have Bitcoin and Ethereum and another coin on their balance sheet. They're getting ready to go IPO in March, I believe. So there's some good news there. We also have some institutions allowing more for their clients to buy ETFs, the spot Bitcoin ETFs. So that's good news there. We also have Riot and the Texas Blockchain Council suing the U.S. Department of Energy for the required survey on the Bitcoin miners. So that's good news there. We'll get into that. Then we also have obviously Riot Q4 numbers, and then also the fiscal year 2023 numbers as well. We'll get into all the data that we have on there and some other information that we have from this from the SEC filing. So a lot to get through. We'll have the chapters down below for you guys as always. And then as always, you guys know the drill here. This is not financial advice for entertainment only. Please do your own research, and I'm invested in following coins and companies for full disclosure. And if you enjoy this type of content, hit the like button, subscribe, helps me out tremendously. And as always, corrections will be posted to Discord, which is through Patreon, and then YouTube community posts, and on Twitter as well. If I make a mistake, we'll get it updated as soon as I can. Okay, just want to let you guys know that. And then let's get into what's going on here with Bitcoin really quick. Bitcoin has been trading downwards for the last 3 days. We've been kind of hitting a little bit lower lows, I guess you could say on it. Right, our first one was we had a wick down here that got us down to 50,642. Then we had it over here where we came down to 50,764, and then on this one was on Wednesday. We went down to 50,628. And then yesterday we went to 50,905. And then just today we went down to 50,513. So it seems like we're kind of heading in a downwards direction right now. We'll have to see how it does. I mean, if you look at the weekly charts here, we can see here that we've had, nice 4 weeks of green here. We may need just a little bit, we may have just needed a little bit of a breather. Which is fine if that's the case, but hopefully we don't get one of these things where we go back down a little bit here. If we do go down, I'm guessing maybe to like the 47,000 mark or the 45,000 mark. At that point, I think that would be, what would that be, like roughly 10%, right? No, don't want to do that. There we go. What is that? That'd be actually down to 45,000. Would that be a 14% correction? To 47, that'd be 11% correction from where we were, basically. So that's still not too bad. 20% would get us down to like the 42,000 mark, which is kind of what we have here, where we have some support, it looks like, right around that range. So we'll have to see how it goes, right? Maybe we'll get a reversal and we'll continue going up, especially as we get closer to having an event. The having event is like right now 54 days away or something like that. So we are getting ever closer to that, which is good news, which should then also help the Bitcoin price go up afterwards. At least historically it has. This time we have the spot Bitcoin ETF, so anything could happen with it. Okay, so that's kind of on Bitcoin right now. As far as the miners are concerned, well, they were all in the red today. I'm not going to go through them. You guys are tracking them anyways. There's nothing really noticeable here that happened today. It's just across the board, everybody was in the red. Single digits in the red, as percentage-wise, so not too bad on that one. Okay, so let's get into the stories that we do have here. We'll see what happens with everything. So this is obviously good news here. Reddit discloses Bitcoin and Ether holdings in IPO filing. The company has acquired Ether and Polygon as a form of payments for sales of certain virtual goods, which is great. And I think we're going to start seeing maybe more and more companies get Bitcoin on their balance sheet, especially since we have the spot Bitcoin ETFs as well. That's going to be, kind of one of those things where it's just going to be a continued climb in, perceived, maybe not safety. I shouldn't probably use safety in that, but perceived notion in some of these CFOs and things like that, that maybe they can't put Bitcoin on their balance sheet here. And we're just going to get slow adoption of that happening going forward. So here Reddit said that it has invested some of its excess cash in Bitcoin and Ether. The disclosure came as part of the IPO filing on Thursday. They have also, I think I read some place here that they have like over close to, 1.3 billion in cash. Wow. The company also has a total of 1.6 billion in assets, including 1.3 billion in cash. So I'm wondering how much they actually put into Bitcoin, right? But that's still a lot of cash. I'm surprised that they're sitting on that much cash and not doing something with it, buying other companies or something like that. So we'll see. It'll be interesting to see how that IPO performs when it does go public in March sometime. Okay, but nonetheless, I think this is good, right? More adoption, more companies getting into it. This is always good news. All right, next here is also some good news here on adoption for the spot Bitcoin ETFs. So a 30 billion RIA platform greenlights just 4 spot Bitcoin ETFs. So Carson gave blessing to BlackRock, Fidelity, Bitwise, and Franklin. Platform approves are a huge catalyst for fund asset growth, right? So that's good news there. And it's basically allowing their customers to get into those ETFs, which is nice going forward. So at least those four are going to benefit in the short term. We'll see if they approve any other ones right now or going forward. But nonetheless, right? Slow adoption, but we're getting adoption, which is going to obviously trigger more growth, and it's going to cause more of a supply crunch on Bitcoin when it does happen, especially when we get into the halving event where the supply is cut in half by from 900 Bitcoin a day roughly to about 450. So again, this is also good news there. Let's see here. Then we got some topic here. I thought this was kind of interesting. So Bitcoin halving and BTC price, will this time be different? Right? We've talked about this ad nauseum. I think it's sometimes on this channel. Basically that, last halving cycle was different from what we're seeing currently. If you guys recall, last halving cycle, a year before the halving cycle, the miners were going down in price while Bitcoin was going up slightly. This time around, we saw the miners going up a year prior to the halving event. We saw Bitcoin going up huge, over 100%. Miners were up 300, 400, 500%, some of them. So we're having kind of a different event, I guess you could say, this time around. Right? It's not like it's the last time it's played out or the time before that. And the only thing that could be driving it is, one, obviously, people are getting more educated on Bitcoin and the halvings and how those all play out. The supply shock, then also people have realized the potential gains in miners as well when Bitcoin does really well. So I think people are just more educated this time around, and they're possibly kind of front running it here a little bit. But let's see what they have to say in this article here. So the biggest digital coin by market cap has shot up in value following the past 3 halving events, but it wasn't immediate. And this time there are other factors at play, including renewed interest from retail investors following the launch of Bitcoin ETFs in the US market, as well as looming interest rate cuts from the Fed, which could be bullish for the risk asset across the board. So obviously we've been talking about this by Bitcoin ETFs, how that has affected the cycle this time around. And then when the Fed does cut the rates, which people are saying they're going to cut this year, that's obviously going to be another kind of like wind in our backs, I guess you could say, for Bitcoin going up potentially. All right. Down here, they also have some analysts. So I hope I'm pronouncing this right. This is going to be a tough one. Desislav Albert, senior analyst at analytics firm Keiko, told Decrypt the leverage is increasing and BTC open interest crossed the 11 billion mark for the first time since 2021 last week. So 2021, we obviously were in a bull run at that point, right? We reached 64,000 during that year, and then we went up to 69,000 after a small correction that we had with the news from China banning Bitcoin mining. So things kind of took a dive there a little bit, and then we kind of went back up. So this means traders are placing larger bets on Bitcoin by borrowing capital via the derivatives market ahead of the long-awaited event, expecting the price of the cryptocurrency to go up in the short to medium term, right? So we're kind of seeing that right now. We've seen a pretty good rally here in Bitcoin and the miners here just in the last basically month or so. So we'll see if this continues going forward. And then down here, there are some important differences relative to previous events which can affect BTC's price performance. The market has matured, right? Volatility has declined. Miners have been preparing proactively for the event, building liquidity via fundraising and selling, she said. So I agree with that, right? We're kind of at a different spot right now. Volatility has declined. If you look at Bitcoin over the last year, we've only had, like little drops in price at the most was like 20% or something like that, right? Where before we saw dips in Bitcoin that were way over 20%. We saw 30, 40% corrections and things like that. We were not seeing that this time around. So there is some truth to this as well. Down here, major fund managers like BlackRock have snapped up billions of dollars in Bitcoin as their clients buy ETF shares that track the underlying price of the asset, which is also obviously causing kind of liquidity crunch in Bitcoin. This, argued Albert, is helping Bitcoin in the long term, regardless of the halving. Also, the sector has already consolidated significantly during the bear market. And most importantly, we have steady ongoing demand for ETFs, she said, which I agree. So I think that's also going to be driving us differently this time around. And the market analyst Craig Erlam told Decrypt the price moves in the coming months should not directly attributed to the halving, adding that Bitcoin's price moving higher is something that should happen over a very long period of time. So maybe what he's looking at there is something that we saw with the spot gold ETFs, right? Where the price of the gold just kind of continued to go up for, 4, 5, or 6 years? I can't remember exactly. But it was definitely a long period of time where it just continued to go up. So maybe we'll see that. I don't know. Time will tell on that one. Mikhail March, founder of the digital asset investment fund ARK36, added that a mature market, particularly the approval of the ETFs, could be what helps Bitcoin soar to new all-time highs with the halving. And I kind of think the same thing, right? We're having obviously more people getting into it. There's more demand, everything else. And then the upcoming halving is more than a historical repeat. He said this time around, it will be a moment of truth for Bitcoin's institutional adoption, market maturity, and the resilience against a complex macroeconomic canvas, which I agree also, right? So right now, Bitcoin's kind of mainstream a little bit here, getting with the spot Bitcoin ETFs. How it performs going forward is going to be obviously indicative of how it might do in the future as well, okay? If obviously the ETF funds and everything else are making money and they're doing well, they're going to make sure that they continue to do that going forward, but we'll see, okay? So I just wanted to point this out to you guys. I thought this was pretty good take on it all right? And then next we have here is obviously the lawsuit here. So U.S. Energy Data Agency to temporarily suspend Bitcoin Miners survey after lawsuit. And this was a lawsuit that was brought on by Riot and the Texas blockchain, what was it? Industry group. I can't remember what the group was named, but here's what we have. The U.S. Department of Energy on Friday agreed to temporarily suspend its emergency survey of energy used by cryptocurrency miners following a lawsuit by Bitcoin miner Riot and an industry group. It was a Texas group. The DOE's statistical arm, the U.S. Energy Information Administration, will halt its mandatory survey for a month and sequester the data it had already received after it began collecting information from Bitcoin miners on February 5th, the agency said in Friday notice to a Texas federal court. Okay, so here it is. Riot Platforms and Texas Blockchain Council had sued the Biden administration in the court on Thursday, seeking to block the survey, which they said could harm business by forcing them to divulge confidential and sensitive information, which I agree. There was a lot of stuff in there that the U.S. Energy Information Administration did not need, right? The only thing that they really needed or wanted was how much energy did they use, and was there an impact on the local citizens because of it or something like that. But I think it was short-sighted even on that part, because if you talk to the miners and to the usually the electrical grid operators, they will say that the miners are a benefit to the network overall because they can use up energy when it's not needed, and they can also shut down when electricity is needed, and that way, stabilizes the grid a little bit. But continuing on here, the EIA had said the information is needed to assess concerns that cryptocurrency miners' increased use of electricity, spurred by high Bitcoin prices, could pose an imminent threat to energy grid reliability, which that's bogus, right? They can curtail, they can shut down within minutes. So that's bogus claim there. The plaintiffs claimed in their lawsuit that Bitcoin mines, which use large amounts of electricity for computing and cooling data processing centers, can actually improve reliability since they can quickly shut down to offset spikes in energy demand during severe weather and can cause blackouts. That can cause blackouts. So which is correct, right? We've seen this time and time again. And it's also beneficial to some of the communities that they operate in, where they get more taxes, everything else on top of it. If you listen to some of the comments that you hear from like CleanSpark team, they're really good at kind of putting this forward out into the public that, the communities that they work in, they're usually getting lower electrical rates for their citizens in that area sometimes, or they're even like decreasing property taxes because they're having so much more income into the city from the taxes and the electrical fees and things like that, which are helping out. So they got to really look into this, I think, some more. And instead of painting everybody with a broad brush, I think misinformed information on the government's part here. Let's see here. They said the emergency demand from EIA was based on speculation and conjecture that Bitcoin mining is likely to present a threat to the power grid and failed to follow proper public notice and comment requirements under federal paperwork reduction and administrative laws. They asked the court for a permanent injunction prohibiting EIA from requesting the data without first complying with the law. And that's fine. But overall, I think it should be just smacked down and given back to the administration there for them to just kind of rethink this, I think. But nonetheless, this is good. I like seeing this. This was definitely a plus on Riot and the Texas Blockchain Council for suing the U.S. government there. And I would have liked to have seen, obviously, other miners jump on this as well, maybe take part in this. But nonetheless, we got this done. That's kind of what I was thinking was going to happen, that either one or a bunch of these miners were going to get together, band together, and file a lawsuit against this. So this is good news here, but we'll see how this plays out. Okay, next here. So let's get into Riot here. Riot obviously reported their fiscal year 2023 financial results yesterday. one question that I had was, which was kind of surprising, and I think they've done this before also, where they didn't do a like a conference call with investors, right? Typically, when you do a quarter end results or fiscal year end results, usually you invite investors to get on a conference call with you and you talk about how you've performed and everything else. They didn't do that this time around. So I reached out to them on Twitter. Haven't heard anything back from them as far as what they're going to do, if they're going to do one, or why they're not even doing one. Because I think, it's not polite to do that, I guess you could say, in a nice way. Because you want to have that outreach with the investors and everything else, and they're not doing it, which I think is that I wouldn't say detrimental, but I think it's a negative on them, I guess you could say. Okay, but here's what we do have. I'm not going to go through the whole press release here. We're going to get into the numbers that I have for them. I copied the numbers over from obviously their 10K filing here into my spreadsheet. So we'll look at that more so than we are going to go through here. But there's a lot of information here, obviously. You can see here their growth plans here are right now. Q2, they want to get to 20 exahash. So sometime next quarter. Right, Q3, they're looking to get to 24. Then Q4, another 4 exahash roughly to 28. Then they want to get the first half of 2025 to about 33. And then the second half of 2025 to 38 exahash. So they have a lot of growth ahead of them. And they're obviously going to need quite a bit of cash on that, which we saw with them in the report. We saw that they diluted quite a bit. We'll get into all those numbers as well. And then also they used the FASB rules as well here that were for Bitcoin. My understanding of it was that they couldn't do it until the first fiscal year of 2024, but it looks like they can do it. So I was wrong on that. So that's actually what helped them out here a little bit for the full year, but I think it helped them out more in the Q4 results, which I think they were positive on EPS, which I'm surprised that they didn't report that, or maybe that's why, excuse me, they didn't do the, well, that's just my thought on it here. Maybe they didn't do the press conference or the conference call is because they can't use the FASB. That's where I'm kind of like mixed up on it, right? If based on my calculations, if you have a positive EPS for a quarter, you would want to really probably tout that, right? You want to be out there screaming from the hills saying that you got a positive EPS, because I think that would be a good thing for shareholders and for the public to know. But they didn't report it here anywhere in this release here. I didn't see them report anything as far as the Q4 results. It's all fiscal year results here, and they're going back and forth. So we'll look at my numbers, and I'll show you guys what I mean by them having a positive EPS potentially here. And that's just my calculated number on it. But yeah, let's get into those things, and then we'll discuss everything else. So Riot, they've updated in the press release, not the press release, but the 10K release, they announced that they had 253 million shares at the time of, I think this was like 2 days ago or something like that. So just recently, this is the latest numbers that we do have for them. So that's kind of what we're using here is the 253 million shares right now. So that gives them a market cap of 3.7 billion, which is now higher than CleanSpark's, because we're using older numbers here, lower shares count. So with the higher share count, we have a much higher market cap for them at 3.7 billion. CleanSpark is at 3.2. So I talked about that, where CleanSpark looked like yesterday overtook Riot in market cap, but they're still higher right now. Their performance of the last 12 weeks has been kind of okay. Has been great. I mean, pretty much in the green here for the most part, 19% from 12 weeks ago. They're up only 6% from 8, 44% from 4 weeks ago. So there's a nice increase there. And then last week, they're up 13%. Okay. Current hash rate, 12.4 exahash, future 38. So they still have obviously quite a bit of growth left in them, about 210% or so. Bitcoin HODL is valued at 367 million right now. Going down here, we cover all these metrics, graphs, and operational updates for monthlies. And then here's the last 4 quarters revenue. So revenue is kind of up and down here for them. Q1 was 48, Q2 was 49, Q3 was 31 million. So a lot of curtailing, I guess, happening in that period there. Q4, they came in at 60 million this is for self-mining only. And then the current quarter that we're in, Q1 right now in 2024, it looks like they're going to be about 67, but it just depends on how much they curtail, right? I'm basically curtailing the same amount that they curtailed in January for the rest of the 2 months that we're in, obviously February and March. And then the last 4 quarter operating costs here, self-mining, that has been increasing as well as their hash rate has been going up. And I think also because, I don't know why it's going up, quite to be honest. The hash rate has been pretty steady here over the last couple quarters here. So I'm surprised that that's going up that much. I mean, we had a little bit of an increase here. Well, from 36 to 41, we're looking at about 5 million. increase here. Now we got about a 15 million. I wonder if they're putting a bunch of stuff in here at the end of the quarter here, potentially, maybe. Okay. Custom mine 1 Bitcoin has been going up. Q3 was at 20,000 based on my calculations, and then they're down here to 16.3 thousand in Q4. So that's looking pretty good. Bitcoin mine quarterly kind of been going down and then back up here. So I think summer months are more where they curtail. It looks like maybe potentially the winter months is a little bit where they mine a little bit more potentially. And then debt to equity is still pretty good at 0.06. Current ratio at 8.3. So healthy balance sheets across the board here. And you can see your total current assets, 1 billion on hand right now. And then total current liabilities, only 121 million. So really good balance sheet there. They got plenty of cash, I think, to get them to where they need to go to get to 38 exahash potentially. But they might still have to pull on that dilution a little bit. We'll have to see on that one. Excuse me. As far as the numbers came in here, I had them at 60 million point 067. They came in at 60 million point 009. I was pretty close. I was off by 0.1%. So I want to be within 2.5%. Can't be any better than that. So I'm pretty happy with that number there. Going down here, also, we'll get into all of these here. Let's move this stuff over a little bit maybe, so you guys I can see what I'm discussing here. So we'll look at the Q3 numbers, Q4, and then the fiscal year obviously here. As far as shares, okay, so shares, we'll get into that right now. Shares have increased 51% over the last year. So from this would have been from Q1, I think. Excuse me. Fiscal year Q4. From Q4 to basically Q4, shares increased 51% from that time frame. And then currently quarter over quarter increased 22%. So we're at 206 million shares, and they're now at 253 million. So definitely quite a bit of dilution there. But they are going to be growing, so I'm okay with that. Current assets, obviously 1.1 billion here. That's an increase of almost 500 million here. So part of that dilution is what we got increasing here in this. Part of it was at least cash increased, and then digital currencies, obviously the value on that increased as well. Excuse me. Going down here, total assets, 2 billion now from 1.4. So obviously doing well there. Current liabilities has increased a little bit here, not much, by about 50 million to 121 million from 71 million. So that's not bad. Total liabilities increased to 163 million from 114. That's fine. They're obviously buying machines, miners, and things like that. That's going to increase. That's not a big deal there. Total liabilities and stockholder equities now at 2 billion. So that's good. And then here we go. So revenues. Mining came in at 60 million. Hosting was only 5.4 million here. Engineering was 13 million. So that's actually been going down here the last couple of quarters here. We peaked here, looks like, in Q4 of last year, maybe. If we look at it, yeah, I mean, that looked like their best quarter there. And it's been going down, up, and then we've been heading downwards a little bit here on it. And then other revenue was only 24,000, looks like. Total revenue was 78 million, which is a nice increase from the 51 that they had here. And obviously, they had a really nice increase in the Bitcoin mining revenue for self-mining as well. But then when you look at the costs associated with it, so expenses for mining was 26 million. So that gives them a pretty good profit margin on that one. Hosting, 23 million. They only made 5 million on it. They're losing a heck of a lot of money on that. On hosting. It's the same thing over here, 26 million. It's like, why are they even doing that? And this is calculated based on what they reported for the fiscal year. We have the data for the other three, so then I'm just subtracting those three from that one to get all these numbers in here for Q4. But if you're, 5.4 million, even if you include, let's see here, if we can include power curtailment credits. Power curtailment credits was only 5 million here. Right, so that still doesn't offset the loss here. So even if you take that out, you're down to about 18 million in hosting expenses, and then you got 5 million in credits. So you're losing 13 million just on hosting alone. I don't know why they can't just cancel their contracts that they have with the hosting people that are at those sites and just call it a day. Give them 30, 40 million and go someplace else, because at this rate, they're losing much more than they are. Well, maybe not 40 million, give it like 20 million. So 2 quarters worth of losses, basically. Get them out of there, put your own machines in there, and you'll be in a much better place. I don't know how those contracts are written, obviously, the clauses and everything else, and then you get legal people involved, and it costs even more. But this is just ridiculous. And I know that they have the contracts from the previous owner, and they're stuck with them, but it's costing them a heck of a lot of money. Okay. So that's bad there. Looking at selling and general administrative, that was 38 million here, roughly here. So quite a bit of an increase from where we were in Q3, which was already a pretty good increase here. I mean, look at this. We had selling general administrative here in Q1 at 12.6 million. You got 19 million here in Q2. Q3 was 29 million, and then Q4 was 38 million. Excuse me. They have not grown that much in their own hash rate and everything else to justify this much of selling general administrative costs. I don't know what the heck they're doing there. Excuse me. Throat is dry. If you look over the year here, how they performed as far as their hash rate has increased from 9.8 to 12.4. You're looking at, what is that, 3.6, right? Not even that. It'd be probably 2.6 exahash, I think. Yeah, 2.6 exahash. And their costs on general administrative have gone up huge. Where did it go? Revenues, here it is. The selling general administrative here from 12 million to 38 million in 4 quarters. That's a 3x increase in it. When you only went up about, what did you increase there? I mean, they increased their hash rate by about like 25% or something like that. So what the heck is going on there? That's definitely concerning there. Depreciation, amortization, fine. That's pretty steady there. And then here we go. Change in fair value. They got an increase, I guess, on this, the way that's accounted for, 184 million based on that. And they included that obviously in fiscal year 2023 numbers. And then I'm including it here because they didn't have it here. So that I'm guessing they potentially put it all into Q4 numbers. Or they could have reevaluated it here, which then even then, I think, we'll take a look at the numbers, but I think even this would still make them a Q4 positive EPS potentially. Okay, going down here, what else do we have here that was kind of interesting to take a look at? The good thing, yeah, I mean, the bad thing, I guess you could say, was power credits. So it's only 5 million here. They had 49 million in Q3, and then it seems like they had 13 million in Q2, 3 million in Q1, and then they had last year they had 8.5 million. And if you look at all the power credits that they got last year, that was only 27 million. This year they've gotten close to 71 million in power credits. So a huge difference there, which is good if it's applied properly. And then let's see what else do we have here that was kind of interesting. Realized gain on sale exchange of cryptocurrencies. So 47 million there. That's a positive for them. What else do we have here that was kind of high? Impairment of cryptocurrencies. Negative 14 million there. They had positives here. Seems kind of weird that we got negatives here, positives here, positive here, negative there on those two things. But that's for an accountant, I guess, to explain. Total cost of expenses came out to be 4.7 million, looks like, based on the 184 million that got added based on the change in fair value of Bitcoin. So that's obviously a huge decrease from the 99 million cost that we had here. Okay, so then gross profit, operating income was 74 million here. They had a negative 47 million here, so it looks like gross profit of 94% if you include obviously the change in Bitcoin value. Self-mining gross profit was at 33 million, 55% margin, so that's looking pretty good. Hosting, like I said, a loss of 17 million. Even if you include the power credits, you're down to 12 million loss roughly. Hosting gross margin, negative 323%. Yeah, get out of that business as fast as you can. Hopefully those contracts are coming up due here sometime. Cost of revenue of self-mining minus depreciation was 56 million. Net of revenue, self-mining minus depreciation was 3.8 million. And then net profit margin on self-mining minus depreciation was 6.93 million. And that's taking those two into account. Cost of revenue, self-mining. So that includes selling and general administrative and then mining costs in here as well. And that's kind of how we're figuring out what that was on it. But then if you include, obviously, the 143 million, profit margin looks a lot better on that. Okay. Operating expenses continuing on here. What else do we have here? That was kind of a shocker here. Not much there. So income loss for the year was 54 million negative. For the quarter, based on my numbers, it looks like 79 million positive. And then net loss was 49 million negative for the full year. And for the Q4 number, 79.2 million. And based on what they reported at the end of December for what they had, they reported 230 million. They reported, yeah, I think they reported 230 million because up top, what did I have? 253, yeah. So 230 million is what they reported at the end of December for their quarter. And I'm using the average between that and the Q3 numbers to get to 205 million on average, so diluted basically average. And that's how I got like 38 cents, possibly positive EPS on here, right? That's calculated. That's kind of what I'm figuring out here. And then if you don't include depreciation in here, so minus depreciation comprehensive income, you're looking at like 69 cents here. And then for the year, they would be actually up $1.16 in EPS. So, right, depreciation is a non-cash expense, but it's still on the balance sheet or on the statement. So that's what they have to go by. But if you exclude that, it's looking a heck of a lot better here on those things. Also, a couple other things to take a note, and we'll get into other things here as well, but where was it? It was on over here. So the reason they curtail, there's been obviously some speculation whether it's because they have a facility close to BitDeer and they're using the same, excuse me, excuse me, I have to take a sip of water. So the speculation is it because they're so close at the Rockdale facility that's close to the BitDeer facility, just down the street from them, and they're using the same what's it called, substation. Is that the reason why? But I think Anthony Power has stated this before, that they are just able to use a certain amount. So they have, in here it states, in May 2020, the company, through its subsidiary Windstone, entered into a PPA to provide for the delivery of power to its Rockdale facility via the nearby Shadow Switch. Pursuant to the PPA, the company has agreed to acquire a total of 345 megawatts of long-term fixed price power in multiple blocks as follows, and then you can see the blocks here. Additionally, under the PPA, the company has the option to purchase additional power at market prices as needed, right? So if electricity used exceeds the amount of contracted, the cost of the excess electricity is incurred at the then current spot rate. Concurrently with the PPA, the company entered into an interconnection agreement for the extension of the delivery system, transmission substation facilities to facilitate the delivery of electricity to the Rockdale facility. Power costs incurred under the facilities agreement are determined every 15 minutes using settlement information provided by ERCOT and are recorded in the cost of revenue of the consolidated statements of operation. Okay, so that's basically why they're curtailing. Sometimes they just can't run it. Sometimes it's, if the price of electricity is over there, the going rate is 10 cents, 12 cents, whatever it is, it really doesn't make sense at that point to run, right? That's kind of why it's happening, especially if they have some of the older miners also. They're not old, but they are older. So Riot does have some of the older miners. If you look up here, these 90 terahash miners, right? At this point, they, depending on the price of electricity, if you're getting 12 or 13 cents, depending at the time, those probably doesn't make sense to run these. And then obviously you have some newer miners that they could possibly run, and maybe that's what they're doing, is running some of the newer miners and not maybe running these over here. So obviously a pretty big juggling act there. Okay, now based on all of this, here's some data that we do have here. So custom one Bitcoin, we already talked about that, was 16.3. Book to value equity is right now 1.8 billion. Price to book ratio 1.9. Enterprise value is 3.7 billion. EBITDA, net profit plus taxes minus plus interest plus DNA, is 146 million. EV to EBITDA is 25. Revenue 78. General administrative was 38 million. That is 49% of their revenue. That is way too high. It seems like it was doing better here in Q1, 17%. That's really good. And then Q2 went up to 25%. Q3 went up to 56%. And then now they're up to 49%. It's like they're spending way too much on something there that probably shouldn't be spending on. That's my thinking on it. May have to dive a little bit deeper into it to see what's going on there. But over the year, it's 35%. Still would like to see that under 20% overall. I mean, there's really no reason. Well, at least I think there's no really reason in there unless they're paying an exorbitant amount on legal fees. So there are some legal things as well that we can possibly look at. Not this one. This one. If we look for, I think it's note 17 is the one that has the legal things in there. Note 17. Where is it at? 17. Here it is. Commitment contingencies, commitments. Down here, they go on to speak about legal proceedings. So here's all their legal proceedings right now. Northern Data working capital disputes. There's some information on that. Legacy hosting customer disputes, Rhodium, SBI crypto company, GMO. You guys can read it. I wonder if that's causing it. Plus, you have the class action related shareholder derivative action. And that's about it. So you got couple of things happening here that maybe that's what's causing all the general administrative compensation. Let's see if we can find what that is. General and administrative expenses. Selling general administrative expenses during the years ended 2023, 2022 totaled 100 million. Selling consists of stock-based compensation, legal and professional fees. Let's see if they actually break it down for us here someplace, and maybe not. Yeah, I don't see it in here. I'll have to look into it to see what I can find. But that is basically it. So, I mean, good, healthy balance sheet, but they have problems in other areas that they need to address. And hopefully that facility that they're getting in Corsicana, they have a better PPA agreement where they can use up all the electricity that they want. But other than that, right now, I think they're overvalued from what they're actually generating as far as revenue is concerned. I have them between $8.23 to $12.34. They're currently at $14.85. And the decrease in the price here, my estimates, is because the shares have increased so much more, but the revenue hasn't really done that great. So the only thing I will say is hopefully they can figure this crap out with maybe the new facility more so than anything else, and potentially do much better with the Corsicana facility than they have so far. But yeah, let me know what you guys think. I mean, there's a lot of good with Riot, and there's also a lot of bad things with Riot right now. So kind of why I haven't invested in them, right? Just that's my take on it, not financial advice. You guys need to do your own research as always. But that's it. If you guys enjoyed it, hit the like button, subscribe. Also, the spreadsheets are available to my Patreon members as well. I thank everyone there for their continued support. I also thank you guys here on YouTube for your continued support. And we'll see what happens over the weekend. We'll run some metrics also. And I do have something else for you guys I was going to show you. I'll show that to you guys right now anyways. I was going to wait. I'll wait for everybody else to report, and I'll show you guys where the current break-even points are for some of these miners based on the latest numbers that we do have for them. Okay? So that is it. Thank you so much for watching. I hope you guys have a wonderful weekend, and I'll see you guys in the next one.